Hey guys, so GoldStreams here. I want to talk about a trade that I took today. So the 19th of February. Now, a couple of important bits that I want to discuss. Obviously, yesterday we had a loss on the account of 1.7% loss. This happens, right? It's normal to have losses in trading. Anybody that tells you they don't have losses in trading is lying to you. I don't think that's possible by any means. So the main thing is when you have a loss in trading is A, you manage your risk. B, you don't try and revenge trade. Okay, so you don't come back and try and sort of win the trade back or try and win that money back. And you close your charts for that day, right? I always say this, set a limit for yourself of how much you're willing to risk in a day. My limit is 2%. If you risk 2% or anything close to 2%, then you close the charts for the day. There's no point of opening them up to see where the price would have gone. If the price still headed where you thought it would have headed, you could do that at the end of the day. Okay, do that at the end of the day. Go back, replay the market, go in trading view. Just don't tempt yourself by looking at a chart, right? It's very, very important to be disciplined. Okay, so anyway, that was yesterday. So today we came in. The loss of yesterday doesn't matter. The same way if you had a winning day, the next day doesn't matter. It's a fresh day, it's a fresh start. So we come in, and as you can see already, gold is literally just pushing up at this point, right? So there was a very, very good impulse entry. It was 6 a.m. It was before our trading window. As you know, our trading window is pre-London to an hour after London Open, which for me is 7 a.m. till 10 a.m. So I wasn't in front of the charts at that point. So I watched gold sort of move up like 50 pips. From when I started, it moved up like 30 pips, 29 pips, which was fine. This is me just flicking through the time frames, just going through sort of everything on one screen, trying to show you guys. But you have to be comfortable, and I always say this: you have to be comfortable with watching price move, and you not being involved in the trade. This is the 4-hour candle open. Okay, so this current 30-minute candle is also the 4-hour candle that's just open, right? So you have to understand that if a 4-hour candle opens up and sort of makes a top wick, the previous 4-hour candle was very bearish, barely had a top wick on it at all, right? Very, very small top wick on it. It sort of made a resistance. The top wick on the 4-hour candle was 11 pips. I was expecting the market to move down at this point. I was waiting for some sort of resistance to be formed, but I was also ready for impulse entries, right? You have to be fluid in the market. If I wanted to see buys, I would want to see a support formed and then continuation, right? But it would have to sort of make sense, right? So buys look better. Sells made sense on the 4-hour. On the smaller time frames, the 1 hour and the 30-minute buys looked good. But gold was ranging, and the range that gold was in was 120 pips, right? So 120 pip range that gold's in. It's massive range. You can take trades within a range like this, but you can't take trades in the middle of the range. So as you can see, when I came into the market, gold had already made the move and already moved up like 50 pips, right? So 50% of that range, the gold has already moved. You can't take a trade in the middle of a range unless you get some sort of market structure, i.e. a support, a resistance, depending on what you're looking for. Okay. In this case, like I was saying, a support would have been lovely for price to continue moving up. But at the same time, I was keeping an eye on the 4-hour candle, because the 4-hour candle, the previous one, like I mentioned, closed bearish with a massive wick to the downside of around 80, 90 pips, 85 to 90 pips. Okay. So I was expecting this 4-hour candle at some point to flip bearish and potentially fill not the whole 90 pip wick, but I knew I could get 20 pips out of it if it did flip bearish. And that's all I look for in the market. So when this 30-minute candle opened, right, this 30-minute candle that's open now, I truly expected this to come all the way up to the top of the resistance, create a new resistance, and then start moving down. But it didn't do that. It started coming down. It made no top wick at all, right? As you can see, it's little to no top wick. So it means the market sort of has no bullish momentum at this current point. If a candle can't even make a top wick, it means bearish momentum is stronger than bullish momentum, right? So just simple sort of understanding of price action, simple understanding of candle formations. So I'm keeping an eye on this. I'm keeping an eye on the 15-minute time frame as well. The 15-minute time frame at this current stage was continuing bullish, right? Continuing closed bullish. This current 15-minute candle literally started to come straight down, and I'm just keeping an eye on everything, and I just want to sort of get an understanding of where sort of a good entry could have been, right? The 15-minute candle closed with a top wick, but nobody, right? Pretty much nobody at all. As you can see here, as this 30-minute candle was breaking the previous 30-minute candle low, I put my first entry in because that means the 4-hour candle was flipping bearish. Now, this whole trade was based on the 30-minute candle having no top wick, breaking the previous candle low, breaking market structure, which meant the 1-hour candle was flipping bearish after making a top wick, right? Which meant the 4-hour candle was flipping bearish and it had a massive raise to the downside. Okay, that's why this trade was taken. As you can see here, as the candle fully broke the low, I had another position, right? And keep in mind, my stops at this point are on top of the 30-minute candle, but I'm keeping an eye, right? I'm keeping an eye on various time frames. So I'm keeping an eye on the 5-minute time frame. I'm keeping an eye on the 15-minute time frame. I'm keeping an eye on the 1-hour time frame, right? To manage risk. So this is the 4-hour time frame. You can see what I mean. It flipped bearish at that point. It's heading down. So the candle keeps moving in my direction, which is fantastic. The other thing is, guys, when you take a trade, right, and you've committed to that trade, you've calculated your risk, right? You've calculated how much you want out of the trade. You have to stick and give the trade time, right? It's normal to see drawdown. I don't know why traders panic when the trade goes against them, whether they be 10 pips, 15 pips. There's no point of panicking, right? It's normal to have fluctuation. It's rare to have a trade with zero drawdown, okay? It's normal to have a little bit of drawdown. Get comfortable with drawdown, right? Understand that price is going to keep moving. Keep in mind, right? Look at various time frames. So here we're looking at a downtrend. I'm keeping an eye on the 5-minute market structure. If this current 5-minute candle breaks the high of the previous 5-minute candle, I'm going to close a percentage of my trade. Okay? So understand that for a downtrend, you need candles to make lower lows and lower highs. Okay? This candle wasn't breaking market structure. Even on the 5-minute time frame, it was respecting previous candle highs. That's why I'm not panicking. And again, this where you can see on the top right hand side, the position went up to 25 pips negative. That's 2 positions open, right? So one position was in 12 pips and the other position was in like 13 pips drawdown, right? It's not bad, right? Just get comfortable with understanding that drawdown is normal, but make sure that candles are respecting the trend. So make sure they're respecting, if you're in a sell, make sure candles are respecting previous highs, okay? Again, don't panic and close trades early, right? Wait for time frames to close. So in this case, when the 15-minute candle did close bearish, okay, and I'll show you exactly what I mean. When the 15-minute candle did close bearish, you're going to see that in a bit. The 30-minute candle obviously was still open at that point. I moved my stop loss. I moved my stop loss to the 15-minute low. So where I'm currently now risking 2% of my account, okay, and this is very, very important, where I'm currently risking 2% of my account, and risk reward is something else that a lot of traders concentrate on. I'm risking a 1-to-1 here, or 1-to-1.5 here. When the 15-minute candle closed bearish, right, and it closed outside of the zone, very simply, I moved my stop loss to above the 15-minute high, which ended up being basically nearly break even. I think my stop losses were at that point like 5 pips. I had a 5 pip stop loss. Okay, so just you have to understand. But then when you move your stop loss, you also have to be comfortable with taking something off the table, right? There's no point of moving your stop loss. Okay, there's no point of taking lowering your risk without sort of taking something off the table. The worst thing that you could do is move your stop loss, as you can see me do here, and then expect sort of price just to keep moving. Understand you lowered your risk, take something off the table, okay, and when you take something off the table, put your position fully into break even. So as you can see here, we're running at like 27, 28, 29 pips. I'm not going to wait for the full take profit to be hit. I'd rather take this. So I took 27 pips off the table there. I put stops to break even. I let her run. Because again, you're taking an impulse entry. Okay. An impulse entry meaning that price can easily reverse. We're just trading a wick on a 4-hour candle. Hope you understood this, guys. Any questions, feel free to reach out to me on Instagram. Yeah, thank you for watching.